All right, now it's time for business news. All right, now the markets, I believe, are reacting. The rand has briefly crashed to 16 rand 95 to the dollar. And for more on that, we're joined on the line by Iraj Abedian. Dr. Abedian, thanks so much indeed for joining us. This rand, I suppose it's predictable, and I guess it's really more about how low will it go?
Thanks very much, Peter, and greetings to our viewers. I think nobody knows, quite frankly, that we're living in a very, very unusual and uncharted waters. Nobody can predict, but one thing that we can be absolutely sure about is extreme swings in the markets in terms of various currencies. Of course, when it comes to the rand, we know we have our own growth problems even without COVID-19. Then we have a global recession looming. Even in the United States, which was an economy doing very well, suddenly now they are talking about recession. China is talking about recession. Remember, for 30 years, we have not had anything like recession in China. We only had 6% growth, 7%, whether it's 6 or 7 or 8. Now suddenly they're talking about recession, and China is one of our major trading partners, and in fact the major partner when it comes to some of our exports. So when you get a global economy going into a recession mode, when you get the supply side of the economy literally being forced to stop producing, we are now globally in a synchronized way in response to this pandemic, we are paralyzing the supply side of the economy. So open economies like South Africa are vulnerable, and our currency demonstrates that. For example, we know that as part of this package of anti-pandemic, government is doing certain things. The Reserve Bank tomorrow is going to cut the interest rates. Whether it will cut it by 1%, more than 1%, nobody knows. And the rand is already anticipating that and responding to all of those factors, both structural factors as well as market-related interest rate factors.
I suppose in times of extreme events such as this, speculators can enter the market, and might we be vulnerable to speculation?
Absolutely, and that's why as I mentioned, one thing that you can bet on is that the speculators will take position. The market, as it's often called, overshoots. Now it can go to 17, it can go to 18, it can go to 19, and then come back to below 16. In the meantime, everybody is just throwing a dart in the dark, and nobody knows what the outcome will be. But there are speculators whose job it is to put big amount of money and gamble along this. But the rest of the economy must, in my view, should stay calm. This is a temporary thing. This is not going to be a permanent state of currency or anything. But it will be 3 to 6 months of living with uncertainty and not knowing which way things will go.
I think you partly answered my next question, and I'm just comparing like with like. When we look at developing nations and their currencies, why is ours being affected, it seems often, more significantly?
More significantly because our economies are more vulnerable, because we are more dependent on any of the developed countries for inflow of capital. Those countries export capital, we bring in capital. We are dependent on them. Therefore, our currencies reflect that. It's not just South Africa. All the economies that are capital importing countries, their currencies are far more volatile than, let's say, the ratio between the pound and the US dollar or euro or so on. So it is a question of, are we a capital exporting country, in which case our currency is more stable? If we are a capital importing country, our currency is vulnerable. If on top of it we have growth problem and political problem and poverty problem and all the other problems, then it makes the volatility so much more.
Is there much more that the government can do? I mean, we're seeing pretty extreme measures in countries like France, for example, in supporting business with the suspension of tax payments and other things like that. Our cash reserves and our finances are not as good, but is there much more that we can do to try and keep the patient alive?
That's right. I believe we can. If the governments don't have to throw money at the problem, so to speak, they could coordinate, for example, in South Africa, and this is what I firmly believe what needs to be done, coordinate between the banking sector and the Reserve Bank to do a mix of targeted rescue packages. By that I mean a substantially lower interest rate, followed by banking industry as a whole, not just one bank. The entire banking sector need to suspend terms and conditions for the existing loans, support businesses that are growing. Peter, we're also thinking of doom and gloom, but at the moment there are businesses that are printing money because they don't know how much they are not produce sanitizers and this and that and the other. So there's a lot of businesses that are now doing good business, and the banking sector needs to provide them with liquidity so they can even do more, employ more, and the sections of the economy that are benefiting from this uncertainty, they should be supported. Sections that are suffering need to be supported differently, because for the next 12 to 18 months, they will require banking and credit support. So that's the type of role that the government should be playing at the moment, not thinking of just throwing money at it that it doesn't have and then say, well, I don't have money, so I can't do anything else.
All right, so perhaps finally, and I know it's speculation, but just how bad can it go for the Rand?
The Rand, as I said, is anybody's guess. It depends on what happens in the global economy. If U.S. and other major trading partners that we have, they come and pronounce recession, it means that we will be in a deeper recession. If our government and the Reserve Bank and the banking sector do not come out and provide a counter punch, then the Rand could go to anything. Just pick a number.
All right.
In the short term.
We'll leave it there for the time being, but I suppose the message there is do what we can in the meantime. That was Dr. Iraj Abedian, who's talking to us on the line.